Good evening. Thanks very much for joining us on India Business Hour. I'm Shireen Bhan. The top stories that we're tracking for you this evening. US President Trump ramps up the rhetoric hours after hitting India with a 25% tariff and a penalty for buying Russian oil. Calls India a dead economy, says he does not care about what India does with Russia. Treasury Secretary Scott Bessent says India has not been a great global actor and the trade team is frustrated with negotiations. Commerce Minister Piyush Goyal promises to take steps to secure national interests in Parliament after Trump's tariff onslaught. Government sources say India will not jump the gun as it remains committed to a fair deal. Trump's new tariffs likely to impact India's GDP by about 50 basis points. Say brokerages the new tariffs are unlikely to impact pharma or steel exports. Sources say exports of smartphones, laptops and tablets also exempt, at least till the 14th of August. The White House does not provide any details on the proposed penalty when asked by CNBC-TV18. Hours after hitting India with tariffs, President Trump announces a deal with Pakistan to develop oil reserves, says Pakistan could be selling oil to India. Trump also inks a deal with South Korea, imposing 15% tariffs. A roller coaster ride on the Lal Street. The Sensex and the Nifty failed to hold on to intraday recovery and close with losses. 39 out of the 50 Nifty stocks close in the red. The Supreme Court admits a petition seeking a review of its own judgment ordering the liquidation of Bhushan Steel and scrapping the insolvency process. The court observed that this is a fit case where the judgment needs to be recalled and the matter needs to be considered afresh. India's fiscal deficit shoots up in the first quarter, hitting 18% of the full-year target. Tax revenue growth is also slower compared to last fiscal, but capital expenditure accelerated, hitting 25% of the target in just 3 months. Tata Motors to acquire Italian commercial vehicle maker Iveco Group for 38,000 crore rupees. Plans to launch Iveco's products in India and on the market. This is the second biggest acquisition by the Tata Group since the steel maker bought Chorus for $13 billion in 2007. Maruti reports a steady first quarter, meeting expectations. Revenue up 8%. Other income boosts profits. Margins contract by over 200 basis points, but in line with estimates. HUL meets estimates in first quarter as it gears up for a CEO transition in August, with Priya Nair succeeding Rohit Java. Domestic volume grows by 4%. The management says it expects the gradual recovery to sustain. Microsoft beats estimates in Q4 with $77 billion in revenue, joins Nvidia as the only company with $4 trillion in market cap. Facebook parent Meta also beats estimates thanks to strong advertising revenue. Zuckerberg says superintelligence is now in sight. More people die of starvation in Gaza as the humanitarian crisis worsens. At least 30 people await food assistance gunned down by Israeli forces after France and UK. Canada says it could recognize a Palestinian state by September. President Trump warns the move could derail the trade deal. A special court acquits all 7 accused, including former BJP MP Pragya Singh Thakur, in the Malegaon bomb blast case. The court observes the prosecution failed to bring any cogent evidence to prove culpability of the accused. 6 people were killed and nearly 100 injured when an explosive strapped to a motorcycle exploded near a mosque on the 29th of September in 2008. The top story this evening that we continue to track: US President Donald Trump ramping up the rhetoric hours after hitting India with a 25% tariff and a penalty, which we don't have clarity on, this for buying Russian oil and defense equipment. Now, in a post on Truth Social, Trump said, and I quote, "I don't care what India does with Russia. They can take their dead economies down together for all I care," end of quote. Now, these statements come a day after President Trump had said that India has the most strenuous tariffs and obnoxious non-monetary trade barriers compared to any other country. Treasury Secretary Scott Bessent, meanwhile, telling CNBC that India has not been a great global actor and that the trade team is frustrated with the negotiations. Commerce Minister Piyush Goyal telling the Lok Sabha today that India will take all steps to protect its interests, also saying that there have been 4 rounds of negotiations with the US team in person, many rounds virtually, and that India will continue its dialogue with the US but will work towards a fair deal. Take a look.
Prime Minister Modi is a friend of mine, but They don't do very much business in terms of business with us. They sell a lot to us, but we don't buy from them. You know why? Because the tariff is so high. They have one of the highest tariffs in the world. Now they're willing to cut it very substantially, but we'll see what happens. We're talking to India now. We'll see what happens.
हम अपने राष्ट्रीय हितों को सुरक्षित करने और आगे बढ़ाने के लिए सभी आवश्यक कदम उठाएंगे। मात्र एक दशक से भी कम समय में
India came to the table early. They've been slow rolling things, so I think that the president, the whole trade team's a bit frustrated with them. And also, you know, India's been a large buyer of sanctioned Russian oil that they then resell as refined products. So, you know, they have not been a great global actor.
Well, that's Donald Trump's Scott Bessent and India's response coming in from Piyush Goyal, the Commerce Minister in Parliament. So what next now for India? A White House official, when we asked, told CNBC-TV18 that reciprocal tariffs will come into effect from the 1st of August, and there are no additional details on the proposed penalty over doing trade with Russia. The official added that reciprocal tariffs are currently in place, but the exemptions for goods including semiconductors, copper, pharmaceutical, steel and aluminum will continue. Remember, that was the case in April, and that continues at least till the 14th of August is what we're given to understand. Sources tell us that the Trump administration is unlikely to accept a trade agreement and is very firm on agriculture and dairy concessions. What sources have also said is that India should now look at having more bilateral relations with other nations. They tell us that Trump's tariffs could have a long-term impact on India if the next president continues with the same tariff rate. Now, the other big question is, how will Trump's tariffs impact Indian industries? Sources say the immediate impact will be cushioned by the exemptions that are in place till at least the 14th of August. This for the electronic industry, which, of course, includes smartphones, laptops, and so on and so forth. India secured a 90-day exemption from higher tariffs for mobile phones, laptops, tablets, and other electronic goods in the month of May. That will now expire on the 14th of August. The White House is expected to hold a meeting in the next few days to decide on extending this exemption. Capital goods, metals like steel and aluminum will also not see an impact of the additional tariffs just yet. The textile industry will face headwinds as US accounts for nearly 30% of all textile exports. So that's a sectoral impact of what happens post the tariffs coming in. Now, our team of editors are here to decode the Trump's tariff announcement and what it means for the Indian economy. Surbhi, Prashant and Pariksha join me now. Surbhi, to you first. To what extent will the tariffs impact India's GDP?
Well, the India-US trade relationship is important and the numbers are large. The United States has been India's largest trading partner for the last 4 years. And the value that we derive out of all our exports to the US is almost $88 billion. So it is indeed a big deal. Now, the problem of the US running a constant deficit, the value of that trade deficit that the US is running, in our case it's a trade surplus for us, is about $41 billion. And all of these are numbers as of last count, FY25. So if we talk about what the implications are then, I mean, clearly these are big numbers. That deficit is something that the US cites as a problem. Now, is it really a problem for us, the Indian economy? Thankfully, because we are a domestic-driven economy, there the numbers are not that big. Because if you're looking at US exports as a percentage of Indian GDP, then the number is about 2.1 to 2.2% of our GDP. So it's not that huge. But there will be a GDP impact. That's what most economists are saying. And I looked at a lot of estimates. Some of these estimates came in April when the first round of tariffs was announced, when we were at 26%. Today, we're at 25%. So if this 25% holds, then what are the views on the street? We are talking about estimates ranging between 30 basis points to 60 basis points of GDP impact. In fact, if I could just sum it up, SBI is saying that at 20% tariff, their original April estimate was the impact is going to be 50 basis points on GDP. They're saying every 1% rise in that tariff rate leads to a 0.5% decline in our exports to the US. Morgan Stanley sees the risk of about 40 to 60 basis points impact on GDP. Cities, again, is at about 30 to 40 basis points impact on GDP. And Nomura is saying that there will be a 2 percentage point impact. There's a downside risk to their FY26 GDP estimate, which is 6.2% growth for Indian GDP. So therefore, the absolute numbers are big, but in terms of as a percentage of India GDP, the impact is not extremely substantial. But the trade relationship, of course, is very, very important.
Well, that's right, Surbi. Thanks very much, Prashant. Coming to you now, a 25% tariff. India faces the highest rate amongst its peer group. Give us a comparison of how India stacks up against other economies, especially when we talk about China plus one.
You know, when all of this started, March, April, before these Liberation Day tariffs were announced, there was, of course, a rollback, a new deadline, etc., etc. It looked like India would be at the front of the line to get a deal. And that also implied that we perhaps will get some sort of a preferential treatment with regards to the final effective tariff rate. And therein, I think, lies the bigger disappointment because, I mean, our trade with the US is not very big at the moment, but expectation and hope, of course, has been that over the next many years, as manufacturing takes root in India, one is going to be able to sell a lot more to the US. And, you know, as we do that, we'll do that at a much lower tariff rate or maybe a lower tariff rate as compared to some of the others who are competing countries or peers, etc., in the region. That has not happened now, I think, as is very clear from the table which will come up on your screen. I've not put up all the countries, but I think it gives you a sense of countries like Vietnam, which are being charged 20%, Philippines 19%, Indonesia 19%, Japan 15%, and of course, I mean, you've got the European Union, which is being charged about 15% now. For India, of course, it is 25 plus something, which is the penalty because we buy Russian oil and sort of military hardware as well. And I think this is one reason why there is a general sort of level of angst and wonder in terms of what is going on. I just want to say one thing more, which I think puts these numbers in perspective. You know, when you ask the question, why is this so, you also have to look at the background. All the other countries that I mentioned, their starting tariffs for US goods coming into their respective countries was 1% to 3.5% to about 5%. So what they charged US was very, very low. Our import duties, India's effective import duties on an average basis at the end of 2024 stood at close to about 11.5–12%. So for these countries to drop their tariffs to zero to get a favorable deal from the US was much easier as compared to, for us, India, to have dropped tariff to zero completely in one go. So I thought that context is important even as we sort of, compare these tariff rates as they stand right now. Back to you.
No, you're absolutely right, Prashant. The context is important, and which is why India perhaps has held back from moving to offer zero tariffs to the US because, as you point out, unlike some of the other countries that you spoke of, we had tariffs as high as 11% versus 1 to 5% in some of those peer group countries that you were speaking of. Many thanks, Prashant, for joining us. But hours after hitting India with tariffs, President Trump has announced a deal with Pakistan to develop oil reserves. In a post on Truth Social, the president said, and I quote, "Maybe Pakistan could sell oil to India someday." Meanwhile, Pakistan's Prime Minister Shehbaz Sharif thanking President Trump for his leadership role in finalizing the deal. Parikshit is here with more details. Parikshit, who would have thought that we'd be talking about the US inking a deal with Pakistan on the day that the US imposes a 25% tariff and a penalty on India?
You know, many in Washington are not surprised with the trade deal that Pakistan has got. Ever since Operation Sindoor concluded, there had been Pakistani negotiators, diplomats, trade teams which had been making rounds of Washington, D.C., of the power corridors to get a deal done. In fact, this has definitely come as a bit of a shock to India, but not a surprise to many in the United States. Donald Trump, of course, saying that this is a historic deal. Shehbaz Sharif going on to thank President Trump for this deal as well. Pakistan had faced a potential tariff of 29%, which has now been suspended. We've seen Pakistan-US bonhomie ever since Operation Sindoor took place. Donald Trump has claimed credit for the Indo-Pak ceasefire 24 times since May 10. We also saw Pakistani Prime Minister Shehbaz Sharif thanking Trump for the role played, the leadership role played in the Indo-Pak conflict. Pakistan has also nominated President Trump for a Nobel Prize. That's not all. We also saw how Pakistan nominated and honored US Central Command Chief General Michael Kurilla with the highest military honor. Let's also not forget that in a major break from protocol and in an unprecedented gesture, Trump hosted Pakistani Army Chief General Munir for lunch in the White House. Now, these are major developments that have been taking place. So if you look at the diplomatic outreach between US and Pakistan, then the trade deal between the two nations is not surprising. Now, what we have to see is whether the current warmth in ties between US and Pakistan is a temporary phenomenon, just aimed at triggering India or pushing India in a corner, or whether it's a long-term strategic pivot that the US is working towards in order to wean Pakistan away from China.
Well, a deal being struck there between the US and Pakistan. Parikshit, many thanks for joining us. US Treasury Secretary Scott Bessent, meanwhile, has said that a trade deal between US and China may happen soon. Speaking to CNBC, Bessent said that there are a few details that need to be worked out with Chinese officials, but he's confident that it will be done.
We pushed back on them quite a bit and made our positions known. I believe that we have the makings of a deal. They announced that we would have a 90-day roll, which was a bit premature. Ambassador Greer and myself will be speaking to President Trump today about whether we will be doing the roll by the August 12th deadline. There's still a few technical details to be worked out on the Chinese side. Between us, I'm confident that it will be done, but it's not 100% done.
So a deal with China likely to be done. That's Scott Bessent. A choppy session on Dalal Street. Despite staging a significant intraday recovery, the benchmark indices failed to hold on to those gains and closed in the red. That's the Nifty intraday story for you. It tells you the picture that the graph is reflecting, the kind of volatility that we saw. 39 out of the 50 Nifty stocks closing in the red. Meanwhile, the rupee closing at an all-time low of 87.60 against the dollar. However, the rupee's intraday fall was less than 0.5%. It's been resilient despite the tariff announcements coming in. Now, the US Federal Reserve has left its key short-term interest rates unchanged for the fifth time this year. 9 members of the Federal Open Market Committee voted to keep the rates between 4.25 to 4.5%. However, 2 Trump-appointed governors, Michelle Bowman and Christopher Waller, dissented in favor of a quarter-point rate cut. This is the first time in over 3 decades that more than one governor has dissented. In a post on Truth Social, President Trump said, and I quote, "Jerome too late Powell has done it again. He's too late. Put another, way too late, is a total loser, and our country is paying the price." So the opposition to Jerome Powell continues. Back home, India's fiscal deficit shot up in the first quarter. From April to June, fiscal deficit has hit nearly 18% of the full-year target. This is much higher than 8.4% achieved in the same quarter last fiscal. Tax revenue growth has slowed marginally, hitting 19% of the full-year target compared to more than 21% last year. However, the government's capital expenditure has seen a sharp rise to more than 24% of the full-year target compared to just over 16% last year. Interest payments have hit 30% of the full-year target, leading to a rise in revenue expenditure. The big story from the court: the Supreme Court has admitted a petition seeking a review of its own judgment, ordering the liquidation of Bhushan Steel and scrapping the insolvency process. The court observed that this is a fit case where the judgment needs to be recalled and the matter needs to be considered afresh. Ashmit is here with more. Ashmit, significant ruling there coming in from the Supreme Court. Big relief for JSW and its lenders, but also big relief for the IBC process itself.
Indeed, a number of these concerns had been raised by the lenders themselves, by JSW Steel as well, that this is taking back the IBC process right to its inception. The clock has been set back, that there are numerous investments that have been made by JSW. All of that have not been considered. That on the mere issue of timelines and adherence to that timeline, on that mere issue, a resolution plan of nearly 20,000 crore rupees was scrapped. Now, all of these arguments appear to weigh on the minds of the Supreme Court. The Supreme Court today, as a part of these proceedings, mentioned that prima facie it is of the view that there has been an incorrect application of law by the Supreme Court judgment which had scrapped the JSW Steel resolution plan, going on to say that this is a fit case for reconsideration. This is a fit case for hearing the review, and on that basis allowing for these review petitions, and now saying that next Thursday this matter will get taken up for further hearing. The Supreme Court had some strong words. The Supreme Court said that the powers that have been used by the court should only be used to do justice and not injustice. Also, in fact, putting across how 25,000 people will be brought on the roads if this company is sent into liquidation, and then going on to say that this is a case which is weighing on the minds of the judges that they will want to consider right from scratch in terms of how this resolution plan is to proceed. So on that count, relief being granted, the review petitions being allowed, and on that count, the hearing, we understand, will begin next week from Thursday. Back to you.
Ashwit, many thanks. Tata Motors announcing that it will acquire Italian commercial vehicle maker Iveco Group. The deal will be valued at 38,000 crore rupees, and the all-cash transaction is set to be Tata Motors' biggest acquisition to date. The deal is also expected to close by April 2026. Replying to CNBC-TV18's query, the company's chief financial officer, PB Balaji, said the company may need to raise €1 billion for the acquisition.
We have not yet made up our mind in terms of the magnitude of the equity raise. It obviously has to be discussed with the rating agencies as well. But we believe close to about €1 billion kind of a fundraise is what in the ballpark range will come on to. How much exactly it will be, let's work through the problem. And we are comfortable with respect to the metrics that we will land with that kind of a fundraise. And also, other thing is that monetization of Tata Capital stake, that also needs to be factored in. And together, that's more or less takes care of it.
Well, that's Tata Motors for you. Up next on India Business Hour, flurry of India's blue chip companies announced their first quarter earnings. We get you the CNBC-TV18 Edge from Earnings Corner right after this. And you can catch all of CNBC-TV18's news and updates on YouTube, Facebook, Instagram, X and Jio Hotstar. Let's turn the spotlight on earnings. Maruti Suzuki reporting a steady first quarter amidst muted expectations. Sudarshan decodes the auto major's performance for us. Sud.
It's a tough environment for the auto sector, especially companies like Maruti, which is the market leader in the entry-level segment, and this segment has been under pressure. But in this tough environment, company has reported earnings for Q1 FY26, which are looking largely in line or slightly higher than estimates. Profit was higher 2%, but it was significantly aided by other income. Revenue has increased by 8%. EBITDA was down 11% year-on-year, but again, here also, number is higher against our estimates. Margin has slipped more than 200 basis points year-on-year, but has come in at 10.4%, which is higher against our estimate of 10.2%. What has worked for the company? Domestic volumes were down almost 5%, but export volumes have seen a significant growth, and that has led growth of 8% in the revenue that you are seeing. In the commentary, company has mentioned about a few headwinds related to margin. First one is adverse commodity prices. Basically, that means the increase in raw material costs that have impacted margin. Second, foreign exchange movement also had a negative impact on margin. So apart from the earnings, we'll have to see exactly what does company say on the outlook, especially for the upcoming festive season. But as far as earnings are concerned, it's largely in line or slightly higher against muted expectations.
Thanks very much, Sud. That's Maruti Suzuki. And staying with auto, TVS Motors reporting a strong set of numbers in the first quarter, beating estimates on most parameters. Net profit up 35%, margins expanded by over 100 basis points. Revenues also crossed the 10,000 crore rupee mark for the first time, so an important milestone there for TVS. Eicher Motors reporting a steady Q1. Net profit in line with expectations, up 10% compared to last year. Revenue ahead of estimates, growing 15% year-on-year. Margins also met expectations despite contracting compared to last year. Pharma giant Sun Pharma's revenue in the first quarter in line with estimates, margins ahead of street expectations. The company's US sales came in at $473 million, also beating street estimates. The firm's profit dropped nearly 20% on the back of a one-time loss of 818 crore rupees. FMCG giant Dabur's first quarter numbers in line with street estimates. Net profit up 3%, while revenue rose nearly 2% on an annual basis. Margins were flat at 19.6%. The company has said that unseasonal rains impacted the beverages segment. Food aggregator Swiggy's net loss widened to 1,197 crore rupees in the first quarter. The losses were led by the quick commerce division Instamart, where the losses have widened further from a year ago. Overall revenue, though, up 54%, while revenue from food delivery grew over 18% on an annual basis. HUL meeting muted estimates in the first quarter as it gears up for a CEO transition in August, with Priya Nair succeeding Rohit Java. Domestic volumes grew by 4%. Manglam Malu has the HUL report card.
Well, for HUL, no bad news is good news. That's exactly what the street is looking at. The reported results largely in line with expectations. Right from the revenue, which is coming at around 15,931 crores on a standalone basis, largely in line with street expectations of 15,950 crores. Underlying volume growth at the higher end of the range at 4% versus expectations of 3 to 4%. EBITDA and margins largely in line with 22.3%, 22.2% what the street was anticipating as well. The company's own guidance was between 22 to 23%. And the net profit, however, is slightly higher, but that's on account of lower effective tax rates. So the operational numbers largely in line. Even if you look at the segments, home care revenue grew 2% versus expectations of 2 to 3%. Beauty and well-being nearly 5%. The expectations were 4 to 6%. There's a mild beat on personal care and foods, but my sense is this is largely on account of price-led growth in both soaps as well as tea. The company has said that FMCG demand has continued to remain stable with gradual uptick in recency, so that's a positive. And they maintained their stance from the previous quarter as well, where they've said that the first half of this year would be better than the second half of the last financial year. They expect low single-digit price growth given current commodity prices. Might be a slight improvement in gross margins, but that would be plowed back into ad spends. So as a result of which, they are expecting EBITDA margins to be in the 22 to 23% band as they focus on volume growth going ahead. The next big trigger for HUL after the stock has rallied from the lows is the management change as Priya Nair takes over as the leader from August 1st.
37 years is a long time. That I want to now do something else in the second stage of my career and life, different from what I've done the last 37 years. So it's been on my mind for some time. And we came to a decision collectively with the company that this would be about the right time. Why? Because while the last 2 years have been pretty tough from a macro and a consumption context, I feel quite fulfilled and validated that we have grown in these last 2 years competitively, despite the consumption strains.
Well, Rohit Java there attending his last press briefing as the head of HUL in India. Meanwhile, HUL's parent company Unilever beating expectations for Q2. Robust demand in North America and Europe have driven sales growth. The British FMCG major also maintained its growth forecast for the full year. However, operating profit for the first half of the year declined owing to lower earnings and increased working capital outflows. More global earnings. Microsoft's profits soaring nearly 25%, led largely by record revenues in its cloud computing business. The company reported revenue from Azure and cloud services for the first time, exceeding $75 billion for the fiscal. Market cap jumped to $4 trillion, joining NVIDIA in that elite $4 trillion club. So stellar stuff there from Microsoft. And Meta continues to do well too. Meta Platforms beating street expectations. The company's revenue up 22% on a year-on-year basis as AI fueled advertising sales. Ad revenue stood at over $46 billion. The stock surging in after-hours trading added more than $150 billion to its market cap. The company's raised its guidance for the third quarter as well. Samsung's Q2 profit missing expectations. Operating profit for its chip division shrank nearly 94% year-on-year. The tech conglomerate said this was because of U.S. export controls on advanced AI chips to China. However, Samsung said it expects earnings to regain momentum on AI-fueled demand for tech products later this year. Biotechnology firm Moderna said it is planning to cut 10% of its workforce by the end of the year. The move was announced in an internal memo by CEO Stephanie Bancel. The layoffs will be part of the company's previous plan to cut operating expenses by about $1.5 billion by 2027. This comes as sales of COVID vaccines continue to dwindle. And with that, it is time for us to wrap up this edition of India Business Hour. Remember to tune into CNBC-TV18. The news will continue right after this short break. For now, thanks very much for watching.